Now, if you're personally an investor that either owns ticker symbol DIVO or DIVO, the Amplify CWP Enhanced Dividend Income ETF, and like the fact that this ETF not only has grown over time, but offered low volatility, consistent distributions ongoingly. Well, you're going to want to stick around because Amplify ETFs just came out with a new ETF that's very similar to that of DIVO, only at least so far offers a much higher yield. So like I said, if you're an income-focused investor that also wants exposure to capital appreciation, make sure to stick around, drop a link down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, before we go into this new Amplify ETF that I'm honestly sort of obsessed with as of recently, just to once again talk a little bit about DIVO, I think this is personally a super underrated ETF, and I say this as someone that's owned ticker symbol DIVO in my portfolios for several years now. Now, DIVO is sort of that ETF that you don't really have to worry about. When the market's green, when the market's red, DIVO just always seems to trade within a range. It doesn't really mess with the portfolio all that bad. Now, this is probably because with this Amplify CWP Enhanced Dividend Income strategy, DIVO seeks to lower volatility by utilizing an option overlay on single stocks, which of course provide massive amounts of premium, but also can lower volatility. But the other Amplify ETF that you guys have maybe already heard about, maybe or maybe not, that is similar to that of DIVO, but also a little bit different, is QDVO, the Amplify CWP Growth and Income ETF. Now, for me personally, I've made it very clear that I'm focused on income, but I also want some potential for growth in my portfolio. And the fact that there's so many new ETFs out there that are offering basically objectives that match that is making my job as a dividend investor very easy. Now, it says right here, why invest in QDVO ETF? It says growth and high income potential, seeking capital appreciation from growth-oriented stocks with high monthly income from option premiums and dividends. Also, equity exposure with lower volatility, covered calls, and dividends may help reduce volatility versus the overall markets during times of broad-based market declines. Now, lastly, this ETF is going to be actively managed, which is going to allow portfolio managers to act on things in real time, which can definitely make or break certain situations. Now, the objective and strategy, it says this ETF is looking to seek to provide capital appreciation and secondary high current income. QDVO consists primarily of large cap dividend growth stocks and designed to offer high levels of total return on a risk adjusted basis. Now, QDVO as of right now has an expense ratio of just 0.55%, and for an actively managed ETF, I would say that's pretty fair if you ask me. Now, like I mentioned, QDVO is an Amplify ETF, but it is basically brand new. This ETF has only been trading since August 19th of this year. So again, you are going to be probably one of the first people buying this ETF, at least historically, if of course you grab some shares. Now, for one, the ETF started trading at around $25 per share and is trading just slightly above that on the max time frame. It's up 3.71%. But again, this ETF has only been trading for a short amount of time, so it doesn't even really matter. Now, some of the top holdings in this ETF are going to be names like Nvidia, Apple, Microsoft, Amazon, Meta, Alphabet, Broadcom, Tesla, Netflix, United Health Group. And it looks like as of October 10th, there's around 69 different holdings, which of course, definitely check out their website if you want to see an updated list of everything this ETF is holding as of right now. Now, QDVO is also going to be paying a distribution monthly. So this is also very important, especially for you investors out there that are looking to potentially maybe live off of dividends and distributions in the future. This ETF is going to be paying things monthly. Now, the distribution rate so far, it's only paid one distribution unless I'm mistaken, but we're talking a 7.03% distribution rate, which keep in mind, DIVO, QDVO's brother or sister, is only offering around a 4.5% distribution rate. So with QDVO, you could potentially be exposed to a lot more income generation because of some of the underlying holdings that this ETF holds. Now, to dig into the methodology of this ETF, again, this is very important. It first says growth equities, portfolio of large cap growth equities with historically strong earnings and cash flow characteristics. Next is sector allocation, relatively balanced across a variety of GICS sectors, with CWP determining which sectors to over and underweight based on various factors. And security selection consists of around 20 to 40 stocks, which are screened and included on attributes that we believe are attractive, including earnings, growth, cash flow, relative performance, and management track record. Now the big part is right here, tactical covered call writing. Covered call options are written on individual stocks on a tactical basis and may also be technically written against broad market indexes. So the cool thing to me about some of these more actively managed ETFs is that you're going to have fund managers actually writing covered calls on a consistent basis. It's not like QLD where they buy into the NASDAQ 100, sell out in the money covered call, and just wait and see what happens. This ETF is going to offer tactical covered call writing, which could potentially offer a lot more total return if of course the fund managers get it right. Now, even though QDVO has only been trading for 0.15 years, I still thought it'd be kind of fun to see what the total return for this ETF is, with dividends reinvested along the way / with them not. And at least so far, this ETF offers a 5.76% total return. And if we were to annualize this out, we're talking almost 40%. But the reality is that it's too early to know exactly what's going to happen with QDVO, this ETF that offers growth and of course high income potential. But at least the framework for this ETF seems to be on point, buying into a curated basket of holdings, selling covered calls in them, and having an objective and strategy that I definitely believe in. QDVO is definitely going to be in my watch list for my portfolio, and I'm excited to see what the next few distributions look like. So now that we talked about the new Amplify CWP ETF QDVO and share with you guys everything this ETF has to offer, I lastly want to hear from you down below. Is this an ETF that we could find in your portfolio in the future? Let us know yes or no in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.